Good morning and welcome to Charting the Markets on Wednesday, the 23rd of August 2023. Overnight, the US 10-year yield came off its near 16-year high at 4.36%. and dropped to 4.27% so far, and this has helped equity markets to rise slightly more. We had mixed markets out in Asia, which didn't benefit that much overnight from another strong session in the US, and that was the second consecutive gain we saw in US markets as investors await Nvidia's results out later on this evening after the bell. And there will probably be a lot of volatility when you look at option traders, and what is priced into options at the moment to do with Nvidia is a rise or fall of the stock by around 11% before the end of this week. So we could see some volatility after hours in after hours trading later on today. And basically the market is focused on those Nvidia results going forward. Now, with regards to equity markets today, if we start to have a look at the FTSE 100, we can see here on the daily financial bet that we are bouncing off this support we tested last week, which basically took us back down again towards the March and the July lows, and from where that we're currently bouncing off as UK flash PMI data came in, and that was also part of a whole plethora of PMI data, manufacturing and also services PMI coming out of Europe, and we'll talk about that in a minute. But as we can see here, the FTSE 100 is finally gaining some traction after having traded sideways and is pushing towards the upside, and is heading up and currently testing the late March low at 7,331, and above there the previous support area going back to June of this year and to May. You can see these lows here between 7,401 and 33, which are now, because of inverse polarity, a possible resistance area and target zone for the FTSE 100. So that is what we're aiming for with regards to the FTSE 100. And right now, short term, we look to be bit on this index. Now, in Germany, the story is quite similar in that we've been rising over the last 3 days. We are now on track for the third consecutive days of gains with regards to the DAX 40, and it has risen this morning to around 15,825 on this daily financial bet, and then came off slightly as German services PMI disappointed, and basically shows that Germany's economy is not doing so well after all. And we've also just seen Eurozone business activity fall the most in almost 3 years. So services PMIs out of France and other countries on the manufacturing and services side also showing weakness. So that might be tricky for the European Central Bank, because if it continues to hike rates as is expected at the moment at its next meeting, whilst the Eurozone economy is actually weakening, then that could have a very detrimental effect to the Eurozone economy in the coming quarters. So let's see what that will do in the future. But short term, as you can see here, the DAX 40 seems to be shrugging off this negative flash PMI data and seems to be heading higher still, ahead of Jackson Hole, the Jackson Hole Symposium, which starts on Thursday of this week, and where we'll see the Fed Chair Jerome Powell speak about the Federal Reserve's outlook and whether we'll continue to see a hawkish stance or not. And remember, market participants at the moment, according to the CME FedWatch, are expecting the first rate cut not to be seen before May of next year in the US, and that rates will probably stay on hold with regards to the Fed funds rates between 5.25 and 5.50% in the coming months. So right now, coming back to Europe, you can see here that the DAX is rising, and the next upside target for it would be this orange line, the 55-day simply moving average at 1,998, and then also the last reaction high, that is to say a high which was higher than the previous days and the next day's candles, and this was made on the 10th of August at 16,062 on this daily financial bet. But provided we don't exceed that high, the recent downside momentum may still continue in the days ahead. But short term, it looks as if we're bouncing and a further upside, or that further upside is in store. And if we look at US markets, you can see here that is the Dow Jones Industrial Average, which has been underperforming the S&P 500 and the Nasdaq 100, which have both been rising since the beginning of the year, regaining some of those sharp losses we saw in the last few weeks. Well, the Dow has been range bound really and hasn't really done much, but you can see here we are currently holding above the October to August uptrend line, which can be seen around 34,145, and are just trading sideways. And I guess Nvidia's results later on today may give us some volatility with regards to the Dow as well. And if we were to fall through this uptrend line, then the next downside targets would be made up of the lows seen back in late June and July, and also around the red line here, the 200-day simply moving average between 33,744 and 33,605. So this is a potential downside target area if we were to fall through the 2022 to 2023 uptrend line. If we were to hold, however, and if we were to manage to rise above the orange line here, the 55-day simple moving average, and also Monday's high at 34,649, then also here we could see a reversal to the upside, and perhaps the long-term uptrend resume with regards to American markets as well. The US dollar continues to strengthen as US yields have risen to near 16-year highs on the long-dated yields yesterday, before slightly coming off overnight. And we can see the effect of the stronger dollar on the euro. As you can see here, the euro-dollar chart is still pointing down, is still declining within its downtrend channel from its July highs, and is currently heading down towards the red line here, the 200-day simple moving average at 108.01. So that is a potential downside target short term. Around it, because it's a 200-day simple moving average, I wouldn't be surprised if we were to hold there ahead of the Jackson Hole Symposium, which starts tomorrow in the United States, and where Fed governors such as Jerome Powell will give us an indication of what the US Federal Reserve has in store with regards to future monetary policy. And however, if we were to fall through the 200-day simple moving average and close below it on a daily chart closing basis, then the next downside target would be this March to August tentative support line or trend line, which currently can be seen around 107.65. So that is another potential downside target for euro-dollar. And basically euro-dollar, provided it stays below Tuesday's high, that is to say yesterday's high at 109.30, further downside looks to be more likely than any upside reversal. Moving on to the Australian dollar, where we also saw flash PMI data out earlier today. That really hasn't done much for the currency pair. As you can see here, the Australian dollar managed to appreciate ever so slightly and regain some of last week's losses versus the US dollar. But now that the US dollar is gaining again and appreciating against currencies all over the world, the up move we saw over the last few days in the Aussie US dollar exchange rate to 64.57 seems to have stalled here, as you can see. So what we can see here is basically a downtrend, which is pretty sharp since the July highs at 68.94, so far taking us down to 63.65. And if we were to fall through that level, I would have to zoom out, because we would then be falling towards the mid-October high, and that would take us to a high around 63.50. That would be the next downside target. And then failure there could take us all the way back down again towards the November 2022 low at 62.72. So that is a possibility for the Australian dollar versus the US dollar, unless we were to manage to close above yesterday's high at 64.57 on a daily chart closing basis, and also above the May low at 64.59. And only then could we try to attempt to reach the April low or the late April low at 65.74. But right now it looks to be a downtrend, which probably will continue over the coming days and weeks as the US dollar continues to appreciate. Moving on to the British pound, the appreciation in the US dollar has also had a detrimental impact on this currency pair. As you can see here, we did recover slightly over the last week or so and rose to 128 yesterday, but are now rapidly falling back down again towards the current August lows between 126.21 and 17 on this rising US dollar. And basically, if we were to fall through that area and also through the late June low at 125.91, we could in fact be heading all the way back down again towards the 200-day simple moving average here in red at 123.93. That is a possibility were the support area to give way. But right now we're heading down towards that support area, and this technical bearish view will remain intact provided we stay below yesterday's high at 128. The stronger US dollar has also had a negative impact on a lot of commodity markets. But before we talk about gold and silver, which actually have appreciated over the last few days, I'd like to very briefly mention the price of Brent crude oil. And what you can see here on this daily financial bed chart is that after this sideways trading range we had been in since late May, we rallied to the current August high at $87.93 before coming off again. And right now we seem to be falling again as the rate cuts we saw earlier this week and also last week with regards to the central bank in China have disappointed the market traders to do with the currencies there, and have led to a further flight to quality flows into the US dollar and therefore outflows out of other currencies, and the weakening demand outlook to do with the price of oil, as China is the world's largest oil importer, has led to the oil price coming off, as you can see here. And we are now heading back down again towards the current August lows between $82.81 and $82.31. And if we were to fall through that support area, we would then be heading back down again towards the red line, the 200-day simple moving average at $80.98. So that is a possible downside target if we were to take out that support here. But provided support at $82.31, the early August low holds on a daily chart closing basis, this uptrend is still intact. So we haven't seen a confirmation of this potential in the potential head and shoulders pattern here. At the moment, for this to happen, we would have to fall through the neckline, which we're currently testing, and ideally also to fall through the early August low at $82.31 on a daily chart closing basis. And that hasn't happened yet, so don't jump the gun on this trade. Moving on to gold, and the gold price has declined as the US dollar appreciated over the last few weeks. As you can see here, we dipped down to $1,885 per troy ounce. That was a low that was last traded back in mid-March of this year. And since last week's low, well, actually it's Monday's low, we have been bouncing back ever so slightly despite the rising dollar, and are now heading towards the red line, the 200-day simple moving average at $1,909 per troy ounce. Now around it, we may stall again and then perhaps continue our downward momentum, in which case we could take out the $1,885 per troy ounce low, and that would then take us back to a gap seen on the chart, on the daily chart, in March between $1,872 and $1,870. So that's a possible downside target going forward if we were to fall through $1,885 per troy ounce on a daily chart closing basis. Now, in case of a more bullish scenario taking shape and us closing on a daily chart closing basis above the 200-day simply moving average at $1,909 per troy ounce, then the next upside target I have is really just a minor target, that is to say the mid-June low at $1,925. So that is another possible upside target for the price of gold. But as you can see here, the moves we've seen over the last few days are very muted, and possibly also because market participants are waiting for the comments which will come out of the Jackson Hole Symposium in the United States on Thursday evening, and on Friday when the Fed Chair Jerome Powell will be talking about the Fed's outlook then. Moving on to the price of silver. The silver price has actually outperformed that of gold and risen by about 6% from its lows seen last week. And as we can see here, we have left the downward channel we had been in since July of this year, have risen above the 200-day simple moving average here in red at $23.32, and now also above the orange line here, the 55-day simple moving average, all of which is bullish and is telling us that the next upside target at the late July low at $24.04 is probably within reach for the silver price. And then above there, we've got another upside target at the June high at $24.52. But you can see here, it looks as if the price of silver has once again bounced off the $22 mark or area and is heading back up towards the upper range of its sideways trading range it's been in over the last few months, basically between $26 and $22, and we are currently heading towards the $24 mark on this precious metal as well. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on Twitter. My Twitter handle is @AxelR_IG.